Hey traders, I promise you, if you stick around, I'm going to reveal 2 stocks that can help put money in your pocket. Hey, this is Dennis, the Autopilot Trader. Welcome to this weekend session of Trade Your Way to Freedom, where we cover the indexes with a thorough technical analysis. We cover how to adjust your trading habits to make you a better trader, more profitable, and more consistent. So let's stop messing around and get after it right now. Let's jump into today's session. Hey, welcome to today's session, everybody. This is Dennis Wilborn, the Autopilot Trader. Welcome, Anil. Glad to see you're with us.
Yes, sir. Glad to be here.
Hey, guys, I'm jumping back in just to remind you, stick with the video. The money-making part is coming up very soon. And we got a good session set up for you today. We're going to deliver on 3 things for sure. We're going to, 1, provide you expert weekly technical analysis of the market and what's going on with the market, what to potentially expect. 2, I'm going to be talking about revealing some trade secrets that'll help you become a better and more consistent and profitable trader. And you want to stick around for the money makers. I want to encourage everybody, stick around for the money makers. We've got 2 great stocks that Anil and I have picked out. And so that's what we want to be looking at. So what are they going to be? We'll have to wait and see. So with that said, let's jump into the analysis of the market. And here's where we're sitting. We're continuing to climb the 40% line. That is my target that I use on a yearly basis. Why is that, you may ask? Is because a book written by Dr. Carr about trend trading or swing trading a long time ago basically said that a swing trading system that generates approximately 40% per year is an excellent system. So that was the target when I set up and started doing my back testing and started developing the autopilot trading system. And so that's what I measure myself against every year. We have basically done exceptionally well in beating the S&P over the last for the last 12 years, and we are currently upping the S&P by almost 10%. So let's go ahead and jump over and see what the indexes have to say to us. And let's start with the spiders. And Anil, what I'm seeing with the spiders is a couple of different things. One is it is operating in this level of resistance, and or some people may call that a supply zone, where sellers are sitting here selling back up. They basically relate to the people who were buyers over here. So we're getting a nice sell-off. Not a reversal signal on the weekly chart, although it is a bearish signal on the weekly charts. TSI, the momentum has shifted down on the weekly chart. I would anticipate a potential pullback at least to the uptrend line. The other thing that could happen, which we'll be watching this week, is remember that this time of year tends to be fairly weak in the market. And if it is weak in the market, for the months of August and September, with September being the weakest month seasonally that we usually see, and the stats bear that out. So what am I looking for? I'm looking for a potential of a couple of things. Is 1, if we get a bounce here, what will a relief rally tell us? Will we rally back up into exactly the past high or a little bit higher, and then have the momentum giving us a negative divergence type of thing, and then a drop back down with the August and September seasonality, and then a setup to rally into the end of the year. The one thing, and I'll throw this open for a question for you, Anil, is I know you mentioned it, but with the downgrade of U.S. debt, what kind of an impact do you think that's going to have on the market? Or are we going to just basically go, oh, well, no big deal, we're going to, and gaff it off?
As far as the economy is concerned, But all the charts that are saying, I don't think it's going to have much of an impact.
Okay.
As far as their logic is concerned, that our governance has weakened, I agree with that, but I don't have a solution for
that. Yeah, I know. And so, yeah, we definitely, as the Chinese say, or there's an old Chinese saying that said, we live in interesting times. That is both, and that is considered both a blessing and a curse. So that's what I've got going on with the S&P. Let's take a look at the Qs representing the Nasdaq. Similar type situation, although it is kind of stuck in a no man's land between a level of higher supply up here, which it didn't get quite up to that level, and now a level of support because price actions did break out and cleared out all the sellers that were related to that past high right there. So now it's acting as we would expect it to act, as it is basically switched its polarity and is now a level of support. Now, do we get a bounce, or is it one of those situations where we watch the rally attempt to see what happens? But we do have a rally attempt going on. We also have a lower low on the weekly chart. So the next rally attempt will be very revealing to what's going to happen going forward. On the weekly chart, currently, I have a bearish engulfing after a shooting star. So weekly wise, we're looking very bearish. The market forecast momentum on the weekly chart has turned over, but I give a lot of credence to the market forecast. Weekly, longer term momentum, it's kind of just hanging in there, driving sideways after it's made its big run up. And so until it actually breaks down, that green line right there breaks down below this 80 line here, oftentimes that means, hey, we're just going to continue to drive in our uptrend, and the uptrend remains intact. If you don't know how to use the market forecast, I think I have a video there on the YouTube channel that'll show you how to do that. In fact, I'll put a post and it'll show up here that'll give you a link to that video so you can take a look at it. Now, what about the Russell? Russell is, it seems like we have a repeating theme here, Anil. One, Russell is working within a level of supply, which is related to both this high and this high over here. So there's a significant number of past buyers that are trying to get out of their positions for as close to break even as possible. And we'll see if that, in fact, does take place. Again, as we have with the other indexes, let's see what the rally attempt gives us. If it gets up close to it, but with our market forecast stays in the down position, then we could get a negative divergence showing, hey, we're going to fall further. But as long as we're above the 20, 34, and 50, we could get a pullback probably all the way back into the 50-day moving average, which is going to correspond with this little gap up in a couple of days. So that's where we may make a stand to drive back up through this level. Of course, we could just drop, go sideways for several weeks, get into the end of the year. I'm talking about the end of September, into October, and then have it rally from there. Remember that the Russell has been our weakest link all year long. So on the weekly chart, I'm showing a bearish Harami and basically an outside week, which is a bearish reversal signal. The thing about it is it could be a bearish reversal signal, but doesn't tell us exactly how far it might fall. So, Anil, that's what I've got. What's your thoughts?
Basically, on all three indices and fourth Russell, the daily signals kind of gave up. I gave a it was getting weaker since early last week.
Okay.
The weeklies have held up pretty good. Weekly says, and that's mainly MACD.
Okay.
MACD is holding it on weekly, kind of gave up on the dailies.
Okay. Very interesting. And so, yeah, I'm watching one of the things that I am doing also is I'm learning to apply the longer term swing trading process to trading the micro E-mini Russells, the Russell futures. And I'll be providing some additional information about that, but I'm very interested on how it lets me target shoot. And if you're and I'm not a day trader, but it lets me target shoot. And then if I take advantage of the longer term swing trade where it's going to last 2, 3, 4, 5 days, it actually opens the door for some very significant probability of profits on those E-minis. And so that's another thing that I'm looking at to be able to utilize that to trade into the indexes themselves. And so more to come on that, just a little bit of information. The Russell remains the weakest link. So let's go ahead and jump over in. What about our challenges to successful trading? I love this section because it's providing us an opportunity to talk about habits of winning traders. And today's habit or bad habit is lack of discipline. I know we talked about impulsive trading, and there's a link there. Last week we talked about impulsive trading, how to get over it. Lack of discipline is a tie-in on that. And what about you guys? Where do you struggle with discipline? And Anil, do you have a specific area of discipline that you have to really watch yourself on?
Yes, and I'm still trying to get better. I'm finding out, particularly after the COVID recovery and the downturn we had and upturn, my discipline I need to watch is I need to take action right when the signal tells me to take action. Sometimes delay the action.
Right.
And that's turning out to be costly.
Okay. And that's primarily for just getting in?
Yeah, getting in and getting out both.
Okay.
Because when everything was up and it turns around, I said, no, maybe it's not true.
So you're second guessing.
Yeah.
Okay. And so what about anybody else? Just leave a message down, guys, in the chat area is available for everybody. Just leave a chat there to say, hey, this is what I'm, part of discipline I'm struggling with. And with discipline, steps to discipline, it's so funny. I am very disciplined in certain areas of life, and other areas of life, I suck. I mean, let's say it, in discipline. And so part of the thing that I've recognized is, one, having establish a solid trading plan. So having the plan is one thing. Following the plan can be another thing that can be a challenge. We've got a couple of guys, record keeping with Mark, Jim saying, too much watching the chart during the day. One of the things that, that watching the chart during the day can be very enticing to get you to make dumb mistakes. I mean, I know that I'm saying that not on your case, but I know in my case, the more I watch the chart, the more I lay open the potential of making impulsive trades. Discipline to backtest strategies. Got it. Record keeping. Ditto from Mike. Excellent. Thank you, guys. Folks, number 2 is set realistic and specific goals. One of the things that Mike Lamoth talks about when he talks about setting goals and this type of thing, he said, make sure that your goals are doable. What does that mean? Do you have the bandwidth, to take care of doing the trading like you want to trade? your your desire and your goal may be to trade 5, 6, 7, 8 stocks per week, but your bandwidth that you time available and focus available may only accommodate doing 2. So coming to a decision to say, you know what, I'm going to only trade 2 ETFs, but I'm going to trade them exceptionally well for the next 6 months. Making that decision can take a lot of pressure off of you, plus eliminate some of those things of, I have to watch the charts. I have to watch the charts. I don't know what it is about watching the chart thing, Anil, but I mean, I fall into that trap also, as if I think I'm going to change what the charts are doing by watching the darn thing. You know what I mean?
True.
Huh?
That is so true.
So implement your risk management strategies, which incorporates both your stop losses and your profit targets, and then maintain a trading journal, which is very, very important. Maintain a trading journal where you're going to capture how you're thinking, how you're feeling. Matter of fact, I think next week's session is going to be about what to keep in a trading journal. Would that help anybody out there about how to journal properly? Okay, awesome. We'll do that for next weekend, next week's session. And then last but not least, cultivate emotional discipline. Part of the way we cultivate emotional discipline is to talk about it, is to talk about where we're challenged with, having these emotional situations and all that kind of stuff. Because when you implement money into the situation, money carries with it a level of emotions that are tied to the way we were raised, what we think about money, what our moms and dads thought about money, what our brothers and our sisters and our friends around us think about money. And it can cause us to react in certain ways that just is kind of crazy. So we need to recognize the impact of emotions on your trading decisions and learn to manage them effectively. Developing techniques to stay calm under pressure, such as deep breathing. One of the things that I like to do is I do deep breathing. I follow the Navy SEALs box pattern of breathing. I start my day that way, so that way when I walk into my looking at the charts and what they are doing, I am much more focused. And then trust my trading plan and avoid making impulsive decisions based on fear and greed. And the way I do that is I basically say, I will only place orders either after the market is closed or during the final hour of the market. That's the only time I will place an order. Now, I may have orders that I have placed ahead of time and target shooting, but I will not monkey with those once they are in place. And so that's
everything that you're doing this weekly, pointing out on this one page. Maybe you want to create a PDF or something where all are accessible at one place. That might help us. Okay, excellent. I will do that. Matter of fact, I'm glad you brought that up, because one is in the process of being put together by my youngest son. A PDF that is basically going to be a routine. So I'll let you guys know when that's at. Hey, if you're looking for a great journal, here's one of the best sellers on Amazon. And this was developed by my son. It's an active trend trading and autopilot trading site. I'll put the links down in the description on the YouTube channel and also in the first pinned comment. And I've gotten great reports. I know, Anil, you're using this, Mark's using this, great comments about how this is used and how about how you are using it. It's got some great stuff in it. So simplicity is the key to brilliance. Very religiously. Well, thank you. Yeah, it's a great strategy. Brandon did a really awesome job. The more complicated your methodology, the more room there is for error. So simplify, simplify, simplify. So drum roll, please. Anybody got a drum out there? Let's take a look at the stocks we are trading for this week. Anil, and I know yours is, this is a good looking stock. I mean, I really
Did I get that right? Yes. There you go. Tell me about it.
Yeah, as I was talking to you, this is a oldie, but looks like it's still has stellar fundamentals, and the earnings are over. And as a matter of fact, it took the jump at earning.
Mm-hmm.
And I'm hoping it'll continue.
Yeah, and what I like about this one also, with that, you talk about that earnings gap, is that it gapped above past resistance.
Mm-hmm.
That's always a real big positive. And a gauge everybody can take is after earnings, if you get a gap up, but prices gap but stay below past resistance, that is a weaker earnings report than you would expect. But as you can see here, we gapped above past resistance, and now it is holding its own above that level. Are you buying it here, Anil?
Yeah, actually, I actually bought it yesterday.
Okay, awesome. Yeah, I like it. And just and then your stop loss is, I'm assuming 5%.
Around 5%, yes.
Okay, yeah, I like it. A good looking chart. Look what's happening over here. We had as it was consolidating here, momentum was driving sideways. Now momentum is breaking up on the weekly chart. Momentum is breaking up on the daily chart. So, and with earnings, we had a huge volume day as the buyers came in. Excellent. Okay, my stock is Opera Limited. Now, this is kind of an interesting stock. You may want to take a look at this for other reasons too, because it's been paying out one heck of, at least over here, the last couple for this year, it's paid out $1.20 in dividends. So if it continues that on a $17 stock, that's pretty impressive. I don't know what it did prior to that. It looks like they just initiated doing the dividends. But I've identified a level of support where we came down and retested and broken back up. I would look to buy Oprah anywhere between, I would want to let it get down a little bit, maybe to about the 1720 level, or even down in the 1660 level, 1665. This is a stock that we highlighted to our premium members last week, and so we've already jumped on this one, and we're up 6.5% on it. And so I've got a 97% comp rating, C on the SMR, accumulation distribution of a B, and a 1 on the up-down volume. Anil, what is your?
It looks good on my triple screen chart. I'm looking at it right now, even monthly. It took off on monthly actually early this year and just steadily going up.
Yeah. Like I said, yeah, it looks darn good. It's got, and the other thing that I like about it is while it is doing this consolidation thing, the volume is just almost drying up to zero. I mean, it's, but still over a million shares per day. So that's my pick for today, folks. And Neil, I think that covers everything we wanted to cover today.
Righty, thank you.
So I want to say thank you. Thank you for your stock. Thank you for your comments. And everybody else, thank you also. And I'll, if you are joining us over on the YouTube channel, I don't know if you are or not, because for whatever reason, it wouldn't let me in to get onto the YouTube. But I want to say aloha. God bless everybody. Hey, do you want to be a better trader? Watch this playlist right here for additional insight into how to change your trading habits to become a better, more profitable trader. Aloha. God bless everybody. Thanks, Anil.
Thank you. Bye now.